Okay, so we're doing the Broker Playbook. I'm excited to come out to all you guys and bring something that Christian and I and the team here at Mars Mortgage, some stuff that we're doing different to differentiate ourselves with different partners and different realtors and people in the industry. So I'm coming out to you guys. And the first thing I like to do is describe our market because everyone's different. So one thing that we like to make sure that we understand about where we are is that we're not trying to tell any of the brokers what to do in their market. So jumbo can mean anything that might be over $548,000 in some markets. And in our market, it's something that's over $822,000. So there's three parts that we're going to kind of go through. One is answering the why about the high-end economy. That's something that is important so that you can know your buyer. Two is knowing the competition. Jumbo retail is your competition right now. And three, aligning with clients, aligning with clients, partners, and your technology so that you can create a flow of leads. So it takes a lot of work. You know, we've been at it for a while, but I think it's something that we can give you a playbook and then obviously executing and, going out and taking advantage of all the opportunities right now that there are. So the first thing is the first one, answering the why about the economy. I'm definitely not, a known expert in the economy, but what I do is I do read a lot. I do subscribe to different services. We all know about a lot of them. And what we look at for our consumers is we're talking to our clients and saying, look, we pay for data, we pay for the economic forecasts, and we're trying to be here to present you with information so you can make the best possible decision. So the big why that we're being asked of is, what do you think about home prices? That's a big conversation. And one thing that we tell people is, if you're seeing a winner in any situation, whether you're playing a game or whether you're looking at the economy, it's important to remember that there's winners and losers. And so if you don't know who's losing during a time when you're winning, it could be fake, right? People are worried. They're like, well, what's happening with home values? One thing that we talk about in the jumbo market is we tell them, this is a zero-sum game and consumer behavior changed. So homes are now worth a lot more than they were before. People are looking at the home in a different way. So the way that you see the value of a home has changed because one, you can do your job at home. You don't need to physically be tied to your team and you can still be effective. So that home can be located anywhere in the United States. So there's something that's happening, especially in the jumbo community, where there's a lot of jobs in the technology space, global jobs, that have basically been able to look at, hey, I want to live in Southern California, even though we're based in the Bay Area. And so in our market, we've seen a lot of people migrating from the Bay down to us, people coming maybe from a colder weather and saying, you know what, I built my business, I've worked hard, I love the state I'm in, but it's time, I want to be in that Mediterranean weather. So that's what we're experiencing. So what's fun for us is that we're looking at this and saying, look, the home has fundamentally changed. This is an opportunity. It's not an exaggeration. It truly is an opportunity, and the homes are here to stay. So the conclusion, jumbo isn't going anywhere, and this market isn't temporarily shifting. This is a change in consumer behavior. Okay. So know your market. Number two, after you've taken the time to know the market and you know what your conversation is going to be so that you're an expert in the jumbo community and that you're an advisor, the second part is know your competition, because the first thing that people do is they want to compare. If you're going to take the time to be part of selling jumbo loans, you have to know it's important to address, how do you differentiate yourselves? Us as brokers, we're really fortunate that we're nimble. So we have great service and it doesn't come at an expense to the consumer. It's really, really important for you to be confident in that. So we're quoting rates right now, especially with our partner at UWM. We are quoting rates that are very low and we are beating the competition. So it doesn't mean that you're sacrificing profit. That's not the conversation, but you do have to be consumer first and you do have to present the consumer with the option that's the best for them. So right now, there's a couple other things that you want to talk about when you talk about knowing the competition. It's not all about rates, but retailers are also having competition within themselves and they're losing some of their top talent. They're also losing talent to the broker community. So one thing that we see happening is there's a lot of newly trained people in the jumbo banks and in their departments. And a lot of those newly trained people are in charge of some pretty big loans. So you're seeing delays on their end, and you're seeing that in the jumbo community, they're overwhelmed. The loans are not closing on time, and there's an opportunity for us to step in and still be offering 21-day escrows on properties that are up to $2.2 million with only 10% down. So that is a huge underserved community right now that's super powerful, for you to remember. So on occasion, people beat us, right? And it's important to remember, there's one thing that we've studied is that we stay friends and we stay tight with a broker, with the retail community to know what they're doing. Sometimes we can refer them loans, and sometimes they can actually refer them back to us. So it's really important for you not to think of retail as a competitor. You may be able to recruit them even. You don't know. So a lot of the lower rates that they're quoting require consumers to have $250,000 in the bank, $100,000 in the bank. I've even saw one known bank internationally require a client to have $500,000 in the bank just to have a slightly lower interest rate. And I told them, I don't think that that's worth having that much money tied up when that can be invested. So you have a really savvy consumer, and it's important to just know the financial products available so that they don't look at a home loan and study that interest rate and tie up a ton of money in order to get that rate. So knowing the competition and knowing what's out there is really critical. Part 3 is know the program. It's really important to make sure that it can't be understated that with all the advice I'm giving you guys, we have to know the program. We have to have the mindset of being experts at knowing the information. It's not a sales job. The one thing I can tell people is that being an expert in the jumbo market is a mindset of thinking like an underwriter. And the analogy that I give a lot of our clients, that being a doctor is not what we are. We're nurses. There's a difference. If this is a hospital and we're having a conversation together, right now we're at your bedside. We're the ones changing your bedpan. We're the ones checking your heart monitor. We're the ones helping you, bring family in and out so that you can get well. That's who we are. That's our role in the team. But our goal as the nurses of the home loan is to make sure that we're looking at what's the underwriter anticipating, so that way when the doctor comes in, the chart's ready, it's clean. They can come in real quick, review your file, and they're in and out. We can close and execute in 21 days. No different than you getting well quickly, being in and out of a hospital quick. No one wants to be there, and no one wants to be doing their home loan application. So it's a fun analogy that you can share, especially in our community. Make sure that you're thinking and doing your best to think like our underwriters do. So how do you use the program and be an expert? And why is it important to know all your programs? Is because jumbo spills back into what we know about the conforming market. So what does that mean? Have a plan A, B, and C so that your buyers may consider taking the risk of having no appraisal contingency or removing another contingency that they may have considered having before so that they can compete. Right now, it's a tough market. And we know that the appraisals are coming in lower. It's part of the rebound that we're experiencing post-COVID. You've already talked to people about the market. The values are sustainable because the loser of the economy right now is commercial real estate. That's a downturn that they're experiencing because the home has become the office. The home has even become the school for many kids. So that conversation is going to tie in to the programs that you're discovering with the customer. But have the waterfall effect so that they can maybe take more risk on and get their offer accepted. One thing that we do, plan ABC, is the jumbo loan, maybe still considering putting 20% down and using the 10% down program as the safety hatch so that if it doesn't appraise, they can use the safety hatch to switch over. In 48 hours, they can be switched over to the 10% down, order the appraisals up front, have 2 of them up front. It's a good way to win customers. If there's apprehension, why am I paying for 2 appraisals? Hey, you can either talk to them, let them know you got to break eggs to make an omelet, or maybe do what our team does, which is a lot of us are telling the buyers, hey, if this is something we're using as a safety net, our company will consider waiving the second appraisal fee. it's a cost of doing business and acquiring and working with a new great customer. So there's things that we can do different to set ourselves apart from the competition. So some of these tips that we're kind of going over is making sure that you target this community, because the over $822,000 in our market, over $822,000 up to $2 million is underserved right now with service. It's underserved in closing times. It's underserved in rate, and it's also underserved with risk. Buyers don't realize that they can be taking on a little more risk with backup plans in escrow that are quickly able to be navigated. So the last thing that I want to kind of give the team tips on is how to get leads, who to sell to, and some ideas. So one thing like this video that we're discussing is technology. Now is the time to write some blog articles, post on your reels, share on IGTV, and one thing we do that we have a lot of success on, direct video email campaigns. These types of conversations, even just copying exactly what I'm telling you, explaining it to a buyer, maybe having a series. This is the kind of stuff that we need to be talking to our buyers. The concept of a demographic to realtors. Tell young realtors, especially there's a group of realtors who serve millennials, who are serving that community, who built a business, working with buyers, let's call it under the age of 38. That community actually, a lot of them had a lot of success. As much as it is with the shift of consumer behavior for the past year, are having a lot of success, and they do want to get into a jumbo loan and buy the home that fits their needs now. Well, that's an underserved community that a lot of realtors aren't even calling on. They're not even considering that they can get 2 listings and potential a leg up sale with another buyer as a result. So the opportunity is there to coach realtors into really looking at this as a demographic that's underserved. The concept of the safety hatch that we went over, that's a huge way to kind of pitch it as a savvy way to write an offer and maybe take a little more risk than you normally would have taken as a buyer. And the last thing, going over social media, there was something really cool that that was just very eye-opening last week that our marketing team told me. They said that less than 3% of the business accounts on social media are daily posters. Less than 3%. And our marketing guy, and again, I trust him with everything, and so I hope he's right. But he said to me, he's like, there's about 900, there's about 900,000 business accounts on Instagram alone. I'm assuming that number is similar across the board. That's insane, the opportunity that there's really not a lot of competition, and the algorithm is designed that if you're daily posting, your audience, by the end of 2 or 3 weeks, everyone that follows you will have seen your message. So that goes to show us the opportunity that there really truly still is on social media. It's not gone. It's not that, oh man, like jumbo's already happening. Oh, I guess, Loan Brothers, they're already doing it. I'm probably late. It's not, you're not late. Now is the time. It's an underserved community. It's a great market to get into. A lot of buyers need us. We're really excited to be partners with all the great wholesalers that we have right now, and second mortgage lenders, and just really transitioning into this new economy. So shout out and a big thanks to the AIME community. We're so excited to be broker partners with all of you. Thank you for the referrals. Thank you for the advice, the uplifting comments as we grind through these times. I hope you guys got something good out of it, and I'm looking forward to seeing all of your faces real soon. AIME Fuse 2021. We're bringing our team, Christian, me, everyone, Loan Brothers. We'll see you guys soon. And thanks a lot. See ya.